this episode, we take the ideas behind audit data analytics and move them into situations that feel much closer to real audit work. For someone studying for the Certified Information Systems Auditor (CISA) exam, this is the point where the topic usually becomes easier to understand because abstract terms start turning into visible business problems, control questions, and evidence-based decisions. Data analytics is not valuable merely because it allows an auditor to process a large amount of information. It becomes valuable when it helps the auditor see patterns that manual review might miss, focus attention on the most meaningful risks, and support conclusions with broader and more convincing evidence. Practical applications matter because audits happen inside real organizations where users are granted access, payments are processed, changes are moved into production, and records are created every day. Case studies help connect the tools and techniques to those daily realities, showing how an auditor can use data to move from a vague concern to a focused question and then to a supportable conclusion. Before we continue, a quick note. This audio course is a companion to our course companion books. The first book is about the exam and provides detailed information on how to pass it best. The second book is a Kindle-only ebook that contains 1,000 flashcards that can be used on your mobile device or Kindle. Check them both out at cyberauthor.me in the Bare Metal Study Guide series. A good way to think about practical application is to remember that analytics should begin with an audit question rather than with a data set. If the auditor starts by opening a table of records and simply looking for anything unusual, the result may be a great deal of activity with very little real assurance. Strong audit use of analytics begins when the auditor already understands the business process well enough to ask a meaningful question, such as whether access approvals happened before accounts were created, whether duplicate payments may have occurred, or whether emergency system changes are becoming too common. The data then becomes a source of evidence that helps test that question more broadly than interviews or small samples alone could allow. This matters for beginners because it shows that analytics is not a separate world disconnected from core auditing. It is another way of testing process design, control operation, and business risk, using data as a structured lens rather than using intuition alone. Consider a case involving user access to a sensitive customer application. Management states that every user account must be approved by the appropriate supervisor, assigned only the level of access required for the job, and removed promptly when it is no longer needed. A traditional audit might review a small number of access requests, inspect selected approvals, and ask administrators to explain the process. Analytics allows the auditor to go much further by obtaining the full population of user accounts, role assignments, approval records, creation dates, last activity dates, and management information for the review period. Once that information is organized, the auditor can identify privileged accounts, locate users who have not logged in for a long time, compare access levels across similar job roles, and flag accounts that appear to have been created without complete approval evidence. None of those patterns alone proves a control failure, but together they quickly show where follow-up attention should go and where the control environment may not be operating as consistently as management believes. That same access case becomes even more useful when the auditor compares the account data to other business records rather than examining it in isolation. If the application user list is compared to employee status records, the auditor may find accounts that remained active after termination, remained unchanged after a role transfer, or were associated with people whose responsibilities no longer match the permissions they still hold. The analysis may also reveal shared or generic accounts that do not tie neatly to individual responsibility, which matters because accountability weakens whenever many people can use the same credentials. Some of these items may have valid explanations, such as delays in record updates or non-employee accounts needed for a specific system function, but the existence of those explanations does not reduce the importance of the initial analytic result. The practical value of the method is that it exposes patterns that would be difficult to notice through conversation alone. The case shows how analytics helps the auditor move beyond asking whether an access process exists and toward testing whether the process produces outcomes that actually align with policy and risk expectations. A different case study can be found in a payment process where the audit objective is to determine whether the organization is vulnerable to duplicate or improper payments. The dataset in this situation may include invoice numbers, vendor identifiers, amounts, dates, approvers, payment method details, and possibly bank account information tied to the vendor master records. If the auditor manually reviewed a handful of invoices, the engagement might miss important patterns that exist across thousands of transactions. Analytics makes it possible to search for exact duplicates, near duplicates, repeated invoice amounts within a short time frame, or multiple vendor records connected to the same banking details. The auditor may also compare approval behavior across departments and notice that a small number of users approve a surprisingly high concentration of unusual items. What makes this a strong practical application is that the analytic work directly supports a meaningful business concern. Duplicate or improper payments do not just represent accounting noise. They can indicate weak approval discipline, poor vendor master controls, process breakdowns, or in more serious cases, intentional abuse hidden inside a high-volume environment. The payment case also teaches an important lesson about interpretation, because not every unusual pattern is automatically a finding. Some repeated amounts may reflect legitimate subscription charges, staged payments on the same contract, or standardized service fees that naturally recur throughout the year. A pair of records that looks like a duplicate may turn out to be a credit and reissue rather than an erroneous second payment. That is why the auditor has to use analytics as a starting point for judgment rather than as a machine that labels every exception as wrongdoing. The best practical application comes when the auditor uses the analytic results to focus interviews, inspect supporting documents, and understand whether the pattern reflects normal business activity or a true control concern. In some organizations, follow-up may reveal weak data entry discipline and poor vendor cleanup rather than fraud. In others, it may uncover approvals being rushed through by the same small group of people, which changes the issue from isolated transaction error to a more serious weakness in governance and oversight. Another very common and very useful case study involves change management in an operational environment. Management may state that all significant system changes require documented requests, evidence of testing, approval before implementation, and additional scrutiny when emergency changes occur outside the normal release cycle. The auditor can obtain change records for the audit period, including request dates, approval times, implementation times, emergency designations, and the identities of those who developed, approved, and moved the change into production. Once organized, the data may reveal changes implemented before approval, changes lacking testing evidence, an unusual number of items marked as emergencies, or repeated involvement by the same individuals and roles that should have been separated. The practical importance of this case is easy to see. Poorly governed changes can disrupt operations, weaken security settings, or introduce errors into critical systems, and the risk often grows gradually as exceptions become normalized. Analytics helps the auditor see that broader pattern instead of relying on a few hand-picked examples that may not reflect what truly happened across the full review period. When the auditor takes the change data a step further, the case becomes even more instructive. Trend analysis may show that emergency changes spike at quarter end, on weekends, or after certain release windows, suggesting that the issue is not random but tied to planning pressure or inadequate preparation earlier in the development cycle. Concentration analysis may reveal that a small team is responsible for most emergency activity, which could point to understaffing, poor coordination, or a culture where formal change procedures are treated as obstacles rather than safeguards. Follow-up discussions may reveal that managers often approve changes the morning after implementation because the ticketing workflow is cumbersome during late-night support work. That explanation provides context, but it does not eliminate the control concern because after-the-fact approval weakens the preventive purpose of the process. This case shows a powerful practical use of analytics. It helps the auditor see repeated timing relationships and operating behavior that no single ticket would communicate clearly on its own, which makes the eventual audit conclusion much stronger and much more credible. A fourth case study appears in the review of user activity and monitoring practices, especially where privileged or sensitive activity matters. Large systems often generate more logs and event records than any person could reasonably read line by line, which means an auditor needs a disciplined way to focus attention. Analytics can be used to identify privileged accounts logging in at unusual times, repeated failed login attempts followed by successful access, activity from locations or business units that do not match expected behavior, or bursts of administrative action by accounts that are rarely used. This is especially useful when the audit objective concerns whether monitoring controls are designed and operated well enough to detect significant misuse or suspicious activity. The case does not require the auditor to become an incident responder or to investigate every unusual event in detail. Instead, it shows how data helps the auditor determine whether the environment contains patterns that management should already have seen, whether alerting thresholds may be weak, and whether the organization's monitoring process appears proportionate to the level of risk in the systems under review. The value of activity analytics becomes even clearer when it is linked to business expectations rather than treated as an isolated technical exercise. A late-night login may not mean much in a globally distributed support environment, while the same event in a small office-based process might deserve immediate follow-up. A burst of failed login attempts might reflect a user simply forgetting a password, but repeated failures across many accounts followed by selective success may point toward a more serious concern about access controls or monitoring sensitivity. What makes the case practical is the need to interpret the data inside the organization's real operating context. The auditor may compare the activity data to shift schedules, assigned responsibilities, or recent incidents to determine whether the unusual pattern is explainable or alarming. This approach shows beginners that analytics is not just about spotting technical oddities. It is about understanding which data patterns are inconsistent with the way the business says it operates, and then using that inconsistency as a basis for deeper audit work. A fifth case study can be drawn from backup and recovery controls, which are often discussed in policy but not always tested with enough depth. Management may say that critical systems are backed up regularly, failed backup jobs are reviewed promptly, and recovery capability is sufficient to support business continuity needs. By obtaining backup job results over a meaningful period, the auditor can analyze repeated failures, long-running jobs, missed backup windows, or entire systems that appear absent from the expected backup population. Trend analysis may show that some failures are not isolated at all but recur for weeks without effective resolution, suggesting a gap in oversight rather than a minor operational inconvenience. The auditor may also compare backup results with the inventory of critical systems to determine whether all important assets are truly covered by the process management describes. This case is especially useful for new learners because it shows that analytics is not limited to fraud-like patterns or financial irregularities. It can also be used to assess reliability, resilience, and the quality of operational control in areas where failure may only become visible during a crisis. A sixth case study involves separation of duties, which is a classic audit concern but often difficult to evaluate manually in modern systems. In an integrated business environment, a single user may have the ability to create a vendor, approve an invoice, release a payment, modify a customer credit, or make a change to a sensitive system setting, depending on how roles were designed and assigned over time. By analyzing user roles, permissions, and completed transactions together, the auditor can search for combinations of authority that create elevated risk. The analysis may show, for example, that the same individual both creates and approves certain high-impact transactions, or that a small group of users has accumulated broad permissions through repeated temporary exceptions that were never cleaned up. As a practical application, this is extremely valuable because conflicts in duty structure often hide in plain sight when teams focus on one approval step at a time. Analytics reveals the broader pattern of authority across the full process, helping the auditor assess whether accountability and control balance remain strong enough to reduce the chance of error or abuse. Across all of these case studies, one lesson keeps repeating: analytics rarely stands alone as the final word. Strong auditors use the results to guide interviews, inspect supporting evidence, perform targeted testing, and validate whether the pattern seen in data really reflects a control issue. If analytics suggests terminated users remained active, the auditor still needs to confirm the employee records, understand timing expectations, and assess the significance of the delay. If analytics points to repeated emergency changes, The auditor still needs to determine whether the business context justified the exceptions and whether management review was meaningful. This matters because practical application is not only about finding anomalies. It is about connecting those anomalies to audit objectives, control expectations, and business risk in a way that management can understand and respond to. The most effective case work, therefore, combines data analysis with traditional audit techniques, producing a conclusion that is both broader in coverage and stronger in explanation than either method could achieve by itself. These examples also show why communication matters so much when analytics is used in an audit. Management may feel uneasy if the auditor presents a large set of exceptions without context, because raw counts alone do not explain whether the issue is isolated, systemic, or tied to a specific business condition. A better approach is to translate the analytic result into a plain business message, such as access removal delays, increasing exposure after employee departures, or repeated after-the-fact approvals, weakening the preventive purpose of change governance. In many practical cases, a simple visual summary or trend description can help management see the issue much faster than a table full of raw records. The auditor still needs detailed support in the work papers, but the communication should focus on what the pattern means for control and risk rather than on the mechanics of how the data was sorted. This is another reason case studies matter for beginners. They show that the value of analytics is not just in finding something interesting. It is in helping the auditor explain a meaningful control story supported by evidence. At the same time, practical use of analytics comes with several common pitfalls that new learners should recognize. The first is poor data understanding, where the auditor analyzes a field without truly knowing what it represents, how it is populated, or whether it covers the entire population intended for review. Another is overconfidence, where a polished result creates the impression of certainty even though the underlying data quality is weak or the business context has not been checked. A third problem is focusing too heavily on unusual items while missing control failures that are consistent and routine rather than dramatic. It is also possible to create misleading results when records from different systems are matched incorrectly or when date fields use different time standards that make normal activity look suspicious. These pitfalls do not reduce the value of analytics, but they do show why practical application requires skepticism, documentation, and process understanding. The auditor's job is not simply to run tests. It is to make sure the tests answer the right question and produce a result that deserves to be trusted. As we close, the most important takeaway is that practical applications and case studies make audit data analytics easier to understand because they show what the work is really for. Whether the auditor is reviewing user access, payment activity, change management, system monitoring, backup performance, or separation of duties, the underlying goal stays the same. Data analytics helps the auditor look across broader populations, identify patterns that manual review might miss, and direct attention toward the control questions that matter most. The case studies also make clear that analytics is not a shortcut around judgment, interviews, evidence inspection, or business understanding. It is a way of strengthening those things by adding broader, more structured evidence to the audit process. For a CISA learner, that is the right mindset to carry forward. Good audit analytics is not about producing impressive output. It is about using data thoughtfully so that the audit reaches clearer, more credible, and more useful conclusions about how the organization's controls are actually working.
Thanks for listening. For more audio courses, daily newsletters, and more, please visit baremetalcyber.com.